Hey, are we ready? It's 3 o'clock. Look, I have mine's on. It's 3 o'clock. I'd like to call our meeting to order today and call the roll. Commissioner Doyle, Commissioner Cahill,
Here.
Commissioner Elkine,
Here.
and myself. We are all here. Have a quorum. And are there any announcements? Hearing none. Public appearances. Lisa, do we have anybody on the Zoom call?
No, we have Commissioner Angbarth listening in and Jamie Anderson is listening in as well, but no members of the public that can provide public comment.
All right, we have no members of the public for comment. Thank you. So we'll go immediately to item 4.1, budget accounting and finance services workflow. And CFO, would you like to take the microphone?
So the workflow is going as planned with a couple of minor items. For example, for the November, I'm sorry, your attention to the November items, the financial audit is on track. So I do plan to have the draft audit to the finance committee. And of course, the meeting will be held after the November 5th election, so we can review the results of the election at that time if needed. And also there's a policy for the allocation and appropriation for fiscal surpluses, which is on your agenda for discussion today. I would like to get feedback from the finance committee and bring it back in November with incorporating any of those comments. That's the only change that I have update for today.
Thank you very much. And questions from any of the commissioners at the workflow? I had a couple. One is at our last finance committee meeting, we talked about the additional requests, I thought, for Healdsburg and for Petaluma. Will that be incorporated in this capital project update one, or is this? I guess we could talk about that when we get to that item.
There's some information there.
Yeah, okay. Second question was, December looks like we don't have anything much planned. Wondering if we could do the quarterly review of the CIP that month. At the commission meeting 2 weeks ago, it was talked about we would do look at that quarterly. I think that would be.
Yeah, I think that could be appropriate, especially since you're looking at the Q1 update today, the Q1, if the commission, if the finance committee so desires to advance it to the commission, we'll see it in November. So a December review of the FCIP would be a nice
Work. Okay.
next step.
Well, since we kind of have an open agenda, we'd have time to talk about everything.
Okay.
Just a suggestion.
Mm-hmm.
And I also was wondering about the budget shortfall that you brought to us at the commission meeting. Is that does that going to come back to us for further discussion, the finance committee meeting, or particularly like the savings in the different departments and stuff? Is that going to come back to us or going to go straight to the commission?
It's planned to go straight to the commission. I'm currently still putting the final touches to that proposal.
Okay, I just wonder if we're going to see it again. We will at the commission level.
It's planned to go to the commission level. Let's see it. If you, it's up to this finance committee, but the latest it would go to, that I would hope it would go to the commission is December.
December?
Mm-hmm.
What are any thoughts about that?
I don't see the necessity for waiting an extra month. I'd like to move as much along as we can, as is reasonable.
Right, unless there's a problem. Unless there's a problem.
So I would recommend that we continue to give it to the commission as opposed to the committee.
If you plan to bring it to the commission in December, you could bring it to the finance committee next month if you want to see it.
Well, I just wonder if anybody wanted to say, I mean, it's kind of the first time that I'm aware that we have, done this kind of thing. And, I know you are looking carefully at savings and the different departments and stuff. I didn't know if it was appropriate to bring it back here, whether anybody was wanting to do that, or I'm good either way.
My plan is to take it to the December meeting, so I can make it, to present it to the finance committee in
In
November.
general, I not that we have any special privilege, but I appreciate our chance to review it and discuss it. And normally, if we have chewed it over and are in favor of it, it tends to go more smoothly, I think, at the commission level. I know we're supposed to be reviewing an initial draft of the audit next month, but I don't see any reason why we couldn't do this also.
I agree. I think it might be kind of helpful, just because again, we haven't talked about a shortfall before, just kind of present to us and for kind of screening purposes or something.
Yeah,
if that
that's-
works.
That works.
Okay. Great, thank you. Okay. On to 4.2. Do we have any public comment? I don't know. Periodically check in with you, Lisa. No. Okay, great. So we are back with our CFO on track for her informational report.
So this monthly report encompasses the financial activity through September 30th, which is the first quarter of the fiscal year. And total combined revenues through the end of September totals $1.8 million, or 4.1% of total budgeted revenue. Under property tax, it reflects our normal revenue cycle. We only have $108,000 posted there. And as you know, we see the majority coming in December and April, reflecting the county billing cycle. Under sales tax, there is a typo there. It should be, we received library receipts, sales tax receipts of $1,265,367, as it's shown in the summary spreadsheet for September. And this is the first time that sales tax are reflected in the fiscal year, which represents the July collections. The other revenues are doing well. We have over $500,000 there, 43.8% of the budgeted revenue. And although it's the first quarter, of course, it looks like we're on track for that. Under expenditures, we have $12 million in expenditures, which represents 24.9% of the budget. Under salaries and benefits, we've spent a little over $8 million, which is 26.5% of total expenditures here. It is slightly over the 25%, and that's because of the lump sum payment that we made towards our unfunded accrued liability in July. Given these expenditures, I do expect that salaries and benefits will be within budget at the end of the fiscal year. Rents and leases are a little over the 25% mark, and that's because we pay in the month prior. And in terms of other other areas that are a little over the 25% mark are other contracts and services. Normally, we pay annual subscriptions annually at the beginning of the year, and as the year progresses, it'll normalize. And capital And then you also because this is a quarterly report, you have a report that shows those vendors that have been paid through the quarter under other contract services as the commission has and the finance committee have requested. Under capital will, with all the projects that are online and all, broken ground, 500, we've only have paid out $537,000, but the rate of expenditures will increase in the next few weeks as we're expecting invoices to come in. Under cash balances, September cash balance is at 13.5 million, sales tax is at 18.7 million, and restricted cash is at 5.2 million. And I do break out the bequests balances. Fund balance, as you know, the fund balance is reflected in the statement of special activity and can be modified during the year, which has as the commission approved the Healdsburg and the Petaluma projects, and funds were released under that. So those items are reflected in the this month's statement of statement of special fund activity. I would like to note though that we have yet not concluded the audit for last fiscal year, and any adjustments made to prior year can affect the current year. And so I just wanted to make note of that. And so the fund balances to date are for property tax 12 million and under sales tax 7.7 million. So I'll take any questions. Yes. Mhm.
Any questions, Andy or?
First of all, we're gonna thank you for calling out in the report the three items that were running a little bit above 25%. You've obviously learned to anticipate the questions that the committee's gonna have, and I appreciate you looking at that. I wanted to just make a comment, because I know you're gonna be working on this over the next month. I'm a little concerned by the sales tax number.
Yeah.
For July. It's only 7.5% of the annual budget, but it's also less than last year's July number. And I went back, and I know sales tax is not necessarily a straight line, but when I went back and looked at last year, the July number was just a little bit more than 1/12 of what turned out to be the total. And when I multiplied this number times 12, I came out significantly below our budget number, like $1.5 million. So I know you're looking at this very closely. I know you're going to be coming to us with some proposals. And we don't have a crystal ball. We don't know what's going to happen with sales tax, but it's just concerning to me that the sales tax number was so low. That's all.
Yes, as I did a similar calculation, and as expected, the reports that I have presented to the finance committee and the commission do show that sales tax, I'm recommending to adjust the sales tax less than what was adopted in this year. And that proposal has been presented again to the finance committee, and it is less than last year. And it is actually sets us back 2 fiscal years. So it is we should not take it lightly. And that is the reason why we've made the proposal to make adjustments in our expenditures.
Yeah, thanks.
Thank you for that, Andy. I did exactly the reverse, which was divide the budget amount by 12 and came up with 1.4. We should be looking at about 1.4 million a month. So I appreciate that. And I think I sent it to you, Mayor, Santa Rosa City's, structural deficit, and they're using the term flattening of sales tax. So I guess everybody's, starting to see that. I'm not quite sure why. Along those lines, I was wondering about it probably hasn't affected us yet, but about the interest rate should be decreasing also, right? With the,
I did check with the county treasurer's office and the investment officer. And at that time, he could not, they said it was too soon to give any forecast. He said that actually they try not to forecast interests because it varies quite a bit. But he said even if he tried, it was just too soon since the feds had reduced their interest rate.
Yeah.
Yeah. So I have no further
you're
information.
keeping that hawk eye on it.
But having said that, as you know, part of my proposal to balance the budget is to make some adjustment to interest, and it's still very conservative.
Yeah.
So I think we're pretty much in line with where we've been over the last few years.
Right. Well, thank you for that. Yes, Commissioner Dodd.
Just color commentary. Eric and I were at the California Library Association Legislative and Advocacy Committee, and our lobbyist said that things are looking a little brighter in Sacramento in terms of finances. So it may filter down to the local. She didn't go into specifics, but she wouldn't say that if she hadn't. And she said she had talked to the finance department that works for the governor. So
Thank you for that. All right, looking at the reports, rather than go through them one by one, is there anything, Myrna, you'd like to point out to us? In particular, the reports?
No, I did share with you the allocation of sales tax and property tax according to our expenditures. And again, it's a very good tool for us to report out, to just monitor where we are with our expenditures and our allocation policy. And it's pretty much in line. So unless you have any questions, those were the highlights.
Commissioner questions? Yes.
I apologize for bringing this up months after the fact. I was looking at the report of voucher payments over $50,000. And back in July, there's an item for the Ross McDonald Company. It says event space, labor and shelving system. Could you just clarify what that is?
Sure. So we have this new space for the community engagement department, and we have compact shelving so that they can get more space, and so that's what that is. It's right out on the other side of that wall
Oh, okay, great, thank you. How's it working out?
there. So far, so good. Yes. Storage. Yeah.
Cool, thank you.
I also have a question. It may not belong here, but I see bequests, and I wondered if the not problem, but if the Friends money had sorted out, if the library has spent all the money that the Friends thought they had donated, and have we sorted out? Yeah, not just Petaluma. I thought it was most of the Friends, but we've sorted it out in Petaluma.
What we're reconciling every month,
Mhm.
and the pattern is that many of the branches are dipping into that balance, that carried over balances. So yes, they are utilizing those funds.
Okay, and then tangentially, I was wondering where I should look in the next financial report for the Windsor Friends donation of X dollars for they're going to be helping with some of the furniture in Windsor. So would that be, where would you list that? Where are we listing major?
Two places.
Mhm.
In the commission report, I will include the Friends balances there.
Mhm.
But that doesn't give you the details of it, so I will do that. But in the FCIP, that's where we're listing the different sources of funds for each individual project.
Okay, great, thanks.
Yes, so I'm just trying, I paused because I'm trying to think if we received a commitment letter from the Friends on Windsor. And so we would not include it if we will include it after we receive a formal, commitment. Yes.
A brief follow-up to that, the Friends of Roanoke Park Cotati met this morning and they had a really large balance and that's being worked down quite well. They just got paid for the second pod, which is apparently incredibly busy. And the way that's kind of working is the branch manager and probably Barbara Mesa involved in deciding how to spend the money. And they just come to the Friends and say, this is how we spend it. And the Friends are fine with that. So I think it's worked its way all the way down to about $4,000 or something. So you're doing a great job on that and the reconciliation, they're really happy with the way that's going. So thank you.
Thank you
And
for
I
the
just
feedback.
saw the cost for the Windsor, but I just didn't see where the,
Yeah,
okay, thanks.
now this is way old money. Yeah. So, any additional questions on any of the reports before we move on? Any public comments yet on the meeting? Okay. We are. So we are 4.3, the Q1 capital budget update. You know,
Yes. The budgeting procedure, this is the second year that we implement this procedure to track the capital projects and to track our expenditures for these and the funds that are released based on the progress made to these projects. And so in the first quarter, the library is asking for additional releases. So just in terms of updates for the Petaluma project, staff is requesting an additional $853,469. And that's because we've broken ground, there's work, there's visible progress in the project. And I know that the staff had reported a shortfall of about $1.4 million under the Petaluma project. Since then, staff has looked much more closely at the budget and the sources, the funding sources. And so we've held a meeting with the city of Petaluma that for expenditures that the library can recoup for some of the work that the library is conducting on behalf of the city. And so there's progress in that. So I think that come November, we should have a better figure in terms of a shortfall. And I expect to come back with or in the second quarter, come back with a better number on our budget.
can we just ask a couple questions about that? So you're referring back to our last finance committee meeting and we had this report and it looked as though they needed another 1.4 million. And are you now saying that they won't need 1.4 million?
Correct.
But we don't know quite how much they will need, but it's more than what we thought we thought this project was funded and now we know it's not fully funded, but we don't know exactly what the shortfall is.
Correct. We're working on refining the shortfall. It will be less than 1.4 million.
Okay, and so we'll have those numbers in November then.
Quarter two, which I think we
Oh,
can report back
Oh,
in December.
December, okay. Thank you.
I can give you an update in December.
Thank you. Any other questions about that project? Yeah, Andy?
Yeah, and apologies if you already presented this and I'm just not fully back, but when was the shortfall identified and what happened? Because it seemed like we had a good budget and a plan, and then all of a sudden we didn't.
Sarah, do you want to answer that question?
Sure. I'm sorry. There was many stops and starts for Petaluma. So costs went up pretty dramatically during that time. So a lot of what was estimated came back in higher numbers. I mean,
So-
that's,
That's the
That's-
crux of it. Because of the delays, the cost of just the construction phase increased. In addition, so that left, it took over some of the budget for the FF&E. So what remains unfunded right now is the FF&E.
Got it. Understood. Thank you.
Do you want to talk about Healdsburg and then I'll ask you my Healdsburg question?
Sure. Under Healdsburg, the project is on track and is expected to be completed in spring of 2025. And because it's working so quickly and smoothly, we're requesting to release 100% of this budget to, avoid any delays in payments. And good news, the city of Healdsburg has approved $240,000 towards this project. The city council has approved it, and we should be receiving those funds soon. So that's the update.
Any questions about that?
About this.
We're at Healdsburg right now. It's similar, Andy, you were on the Zoom call, I think the last meeting. I'm not sure you saw this report, which was handed out at the meeting, at the finance committee meeting. But we were trying to get a pretty good number on what was in the unfunded or unassigned fund balances.
Yeah.
And so at that meeting, also I thought Healdsburg was fully funded, and then I thought that turned out they needed another 972,000 based on this report. Is that not true? I can't tell how much Healdsburg the project actually costs.
Yes, there was a shortfall in Healdsburg as well. With some of the funding from additional unexpected funding from the city. And we're still working on the reconciliation of that piece as well. I don't have the FCIP in front of me. But I think there's been discussions about Friends funds coming in for that project as well.
But this is showing, at least as of last month, a significant underfunding of, like a 30% or 33% or something. If that number was correct last time, 972,000.
Yeah, Dave is not here, so I'm not able to get
Okay.
into any other details at this time.
And was that kind of the same problem that we were dealing with old numbers before the construction really started and everything had gone way up?
yes, that's ultimately what we're looking at is on almost all of these projects, original quotes to reality have been off by, a deficit. So yes, it's really the same answer as Petaluma.
So this is a big number that it's also underfunded by both our big projects. And I was curious
I'm sorry, I'm not following this.
well, again, this is a report that was at our finance committee meeting last in September, and I think it was handed out at the meeting, right? I don't know if you got it.
So what is that showing in terms of the underfunding of the Healdsburg modernization?
There's a column here called projects in the pipeline, not funded or fully funded, as noted. And the Healdsburg need, which was my understanding was additional needs for Healdsburg, was $972,000, which
Nine hundred
is,
$72,000 on a project that had a 2 million, it was like a
Yes.
30%
Yes.
total. Actually, no, 40.
I had 45% increase. Yeah, the big one, yes, big difference.
But are you saying that that's not the actual amount of the increase, or we don't know?
The facilities manager is still reviewing the numbers. So I still do expect a shortfall. I haven't heard any difference from that at this point. So I don't know if the deputy director has more information.
No, once we get those numbers, we will be looking at the overall FT&E and what could, because there's adults in most of these projects, so there might be adjustments to the whole scope of the final project, but I can't speak to that until we've had a chance to review and look at where we might have some cost savings, or if we're going to use other funds.
Do you think that will be also in December? We'll have that to look at?
I would like to have a chance to check with Dave. I'd like to say yes, but I don't want
Okay.
to promise something that,
Provisionally,
yes.
yeah, okay. And my question about the 240,000 the city's gonna put in, what is that for? At ADA and what else?
That is just the ADA compliance piece. There's exterior sidewalk.
Okay, so it's just exterior ADA. Okay,
Yes.
thank you. Myrna, did you want to go into the rebudget section? Your
Yes.
report?
So in last fiscal year, I'm sorry, I said 24-25, actually it should be 23-24. So last fiscal year, the commission did approve $90,500 for the Windsor branch mini modernization. It was planned that project would be completed before June 30th, 2024. However, there were delays, and those delays have allowed staff to look at the work that needs to be done in this branch. And one of the items that is in need is safe seismic shelving. And since that branch is going to be closed, staff is recommending to take advantage of that downtime and to upgrade the shelving. So therefore, the rebudget here is for $90,500 plus additional $200,000 for the shelving, for a total of $290,500.
Questions? Yeah, Dave.
Yeah, tell me more about safe seismic shelving. Is it a priority for all of our facilities or not? What's the plan for this?
Yes, it is something we're going to need in all of our facilities, and as we're going through on the modernization projects, any of our facilities that don't have the proper shelving, it will be installed. So with Windsor being closed, it'll be closed January to March. This is just a good time to go ahead and take care of that now.
I wonder if we could have an update, not an emergency, but in the next couple of months about what's needed and where, and the
That
amount.
is a
Because this
project.
is a new item, I think.
I think so.
Yeah.
So I mean, we are putting them in, Healdsburg and Petaluma. That's part of our, and in Petaluma, that's part of the grant funds that they're using the grant funds to pay for that. Since Windsor is getting new carpeting, everything has to be removed. And so that was really the catalyst for this decision. It's like, well, we have to take everything out anyway. Why don't we just replace the shelving with this seismic shelving?
Yeah, it makes a lot of sense.
Yeah.
Let's make them all as safe as we can, as soon as we can. But along with Dave, it would be nice to have kind of project by project, or when this is all gonna happen. Or,
And that is a goal. That's something Dave and I are working on, is having eventually actually getting to a point where we have a facilities ongoing plan, like, you know, this HVAC system that was replaced in 2025. You know, when we anticipate it would need a new replacement, and having that for each of the buildings.
yay, thank you. Yes, Commissioner Doyle.
I remember asking, when the facilities master plan was submitted, whether, it had been analyzed for earthquake safety. And so I think it's always on our minds, but, I'm glad that we're starting this.
And Windsor, the city or the town of Windsor actually declined to do that.
Yes, Mr. Salmon. Yes, very excited.
Is this shelving like completely different than anything, or is it just anchored differently, or what's essentially different about it?
It is anchored differently. It has different requirements, which I'll need Dave to speak to exactly what that is. But it's also, I don't know, if like kind of like a spring component as well. So that it can resist, if there were to be an earthquake, it has more flexibility. Yeah, and there's no danger of it, right, toppling over. And it depends too, on whether we're talking about stacks mounted against a wall or the freestanding stacks.
Thank you. Yeah, Commissioner Doyle.
One more thing, when you've done more work, perhaps it would be, I would recommend that maybe the staff make a presentation to the commission just to let them know about what kinds of things are, that you all are doing to take care of these sort of things and looking at the future, but not in the next few months. This
Right.
just,
It's a good suggestion. Thank you. Agree. All right, under the biblio books under rebudget.
So under rebudget, also last fiscal year, and I'm sorry about these typos. The commission approved a second bibliobus, if you recall. The bibliobus has not been ordered. And again, staff is, has taken this time and really looking at the condition of the current bibliobus that's had some regular major repairs to see, what is the best use of the funds.
Okay, let's talk about the major repairs. Are they unique? Or is it a problem with the vendor unable to build it properly? And are we going to use the analysis of the major repairs in picking a vendor for the next one?
So I'll answer that. It is the air conditioning. It is, so it's basically a brand new vehicle, but it does not function properly in the way that it should. We use the county fleet services, and they look at our, at our vehicles. I can say that I was at the CLA conference and there were many, many bookmobiles there, and I talked to all the staff in all of those bookmobiles, and they tell me that that this is a common problem with bookmobiles, regardless. I mean, I know it's but even the best bookmobiles have issues. So our staff does go to the Association of Bookmobile, I forget, it's ABOS conference. And we do talk to other library systems that have bookmobiles. But one of the things that was said to me is that it isn't just the air conditioning in the passenger and driver space, it's in the whole bus. And that anytime you have a bus where you have ceiling air conditioning, like you're going to have issues. So that is the issue. It's the issue. And we are looking at maybe just taking the vehicle to a Mercedes-Benz specialist and seeing if, because it is a Mercedes-Benz van, if they have some special technical expertise. So we're trying to evaluate, if we should try to do that and fix our existing bus, get a second one. So these are all in the mix. All of these decisions are being contemplated.
Yeah.
I can't resist following up. So are the problems we are having indicative of a failure to follow specs? Or are they designed with flaws in them?
I can't answer that. Yeah, I don't know.
So I can't truly answer that, but I spoke with Jessica Romero, who just came back from the conference. And she heard the same information that Erica shared, where air conditioning is constantly a problem because these vans are retrofitted to be, bookmobiles, library shelving is in there, and it's affixed, and you're trying to get cold air to, fall from the top of this unit. One person that she spoke to was saying that, really also just depends on who's driving the bibliobus that day, because, people that run hot find it unbearable. People who don't seem to think it's fine. So it's a really difficult to gauge, like, what exactly the issue is. So I guess the answer is there's not a clear answer yet, but we're still doing our research because we're hearing from all of these other bookmobile folks that have similar problems, which on the one hand makes us feel a little better about our original vendor. On the other hand, we're looking at all of the options and keeping these inconsistencies in mind. And I'm sure I'm going to learn a lot more when I have a chance to talk to Jessica and Simone, who just returned from the conference, and Brianna.
Commissioner Alkine.
Can we have a report on this at the next finance committee meeting? Can we have an updated report on the air conditioning? I mean, we're not looking at even computer science, much less rocket science. This is simple mechanical engineering, probably in the 1960s designs. And why are we still struggling with what should have been a problem solved by all civilized societies at this point?
Well, and that's one reason we're considering taking it to the Mercedes dealership rather than the county mechanic, just for that area of specialty. And usually the dealership knows the nuances that, their vehicles tend to have. So it's worth a shot to see if that repairs it.
Okay, Commissioner Alkine.
Yeah, I appreciate what you're saying. I don't expect that you have any more information for us today, but I would really encourage you to take a deep dive on this. My recollection was that the bibliobus was quite expensive and that it took an unbelievably long time for them to do the work.
Yes.
I mean, when you talk about, you're talking about it as if it's a modified Mercedes-Benz vehicle, but the price and the time made me feel that it was a hand-built, bespoke vehicle created specific. This was 2 years it took them to do this. I mean, so it makes me wonder, Dave, if you and I should set up an auxiliary, subsidiary business to create bookmobiles, but
Yeah.
so anyway, please do look deeply. Thank you.
Yeah, regrettably, I'm not man the tool user, but I think it's a good idea to find a lot more out because could be embarrassing,
My understanding was that we were gonna buy a much simpler one this time. It was gonna be more like a
Gonna
bookmobile.
have hand.
But even
fans.
that, I agree, being extra cautious is.
Well, the other thing that goes into this, not a total defense, but you're carrying a lot of weight once you add the books in there. So there is some science to the shelving units, how they're put in there and how to make sure, the weight is evenly distributed. So there is a little bit to it. Not to say that makes it all defensible, but I'm hoping to learn more since we did have 3 of our staff attend this event in Indianapolis. So they'll have a lot of information for us.
I'm amazed that there's an association of bibliobus purchasers or whatever that was. Anyway, thank you for your research on that. Yes, Commissioner Doyle.
Just things are very complicated in the library world. And so it would be nice if we could expect it to be fixed in a month. It's not going to be fixed in a month. And we are one of many who are struggling with this. So honestly, it's just like someone said, I can't believe a chair for the library costs $2,000 or whatever it is. Libraries, we have tons and tons of people who come in every day and lots of people get on that bibliobus, and we want to make sure that it's safe for them. So it takes a lot of effort. It just does.
Alrighty, let's kind of move quickly through the information technology update, so we can get to our other items.
So for, under the IT projects, they are on track, and staff is requesting to release an additional $143,172 through January 31st, 2025. The laptop anytime kiosks, we're asking 46,900 to cover, the progress of this project. The self-checkout upgrades, requesting an additional 86,640. As you can see here, the next deployments are for Windsor and Forestville. And then the Healdsburg unit will be purchased in the spring. And book lockers. So the book lockers are currently on order and will be installed in December. So requesting an additional $9,632 at this time.
We had the electricians over Roanoke Park today. I guess that's the going in over there. So that's good to see. So just with we don't take any action on this, but we're broadly supportive of your report and requesting the information that I'm sure you've already documented to come back to us. So any other questions or final comments about this topic? Public comment? No, all righty. Thank you, Myrna. Let's move on to 4.4, proposed appropriations transfer policy. Okay.
So there was an earlier version discussed at the August Finance Committee meeting. And there were questions, I believe it was Commissioner Elkin that had requested to review the approvals required for this. So essentially the purpose of this policy is it's a delegation of authority from the commission to the library director and the CFO. Essentially, there comes time to time where a division would need to change their budget allocation from within services and supplies mainly is what we see, that someone wants to increase training, for example, and what we've have held division managers to is if you're increasing a line item, you have to offset it with an equal amount in another item. So there are regular changes like that, and to avoid any we can't do that without the commission delegating that authority to staff. So without the policy, we have to go to the commission on a monthly basis, and to avoid any delays there, and to streamline a process that could have tiny dollars amounts going to the commission, that these could be approved at the staff level. So that's the intent of this proposal. And so essentially what the policy does is on page 29, the commission will still have authority to approve transfers between funds. So if we need to transfer funds from a bequest into property tax or sales tax to make any expenditures, then that the commission is still has will hold that authority. And the commission also holds the authority to increase any overall appropriations to the library. So the staff will not have the ability to increase appropriations within, for the library itself at the highest level, or increase appropriations within a character. And I've listed what these characters are, and in the policy addresses services and supplies only. So we have also have controls. So the library director has the authority to do these transfers up to $75,000. Above that, the commission would have to make the approval. And then also, it allows the chief financial officer to make approvals up to 25,000 when it comes to transferring within a division. So if it's collections division that wants to transfer funds within their division, the CFO can approve up to 25,000. The director can approve up to 75,000. But there have been cases where collection says, we need this new not subscription, but a new software, and they can pay for it, but that software is maintained by the IT division. Then funds can be transferred from collections to IT up to $75,000, and that would the library director could make that approval. If it's over $75,000, then it would go to the commission.
So just so that I'm clear, when you talk about revenues, that might include grants. So when we get a new grant, we still have to take that grant
Yes.
to the library commission because it's an increase in revenues
Yes.
and we'll have an offset in expenditure.
Correct.
Okay.
It increases revenues and increases appropriations. Yes.
Andy?
I have a clarification and then comment. I'm looking at the bottom of page 27. It says the library has in place the delegation of authority policy that speaks to expenditures. The proposed appropriations transfer policy is a new delegation of authority to address appropriation, that is the budget. What this says to me is we've already recognized that things come up and that you will sometimes need to spend money in a way that was different than planned. You already have the ability to spend the money. What you don't have the ability to do is to change the budget to reflect what you've done. Am I understanding that correctly?
Yes and no. So the commission is the ultimate, it's the policy governing body for the library. So it holds the entire authority to spend and to change appropriations. So in order for even the library director to spend $1, the commission needs to delegate its authority to the library
But
director.
it sounds like we have done that.
Yes, we do.
Okay, so understand the commission has total responsibility and control, but we've already delegated the ability to spend
Yes.
to the director.
Yes,
What we haven't done is delegate the ability to change the budget to reflect the spending that we're allowing. In other words.
correct.
Right?
Yeah.
So on the surface, this seems to me like a no-brainer. It's like, if we've already agreed that things come up and you're gonna need to spend money in ways that are different. We've laid out parameters within which you can do that. Now we're saying, Well, obviously, if you can spend the money, you should have the ability to have that reflected in the budget. That makes sense to me. The wording and examples, I'm sorry, remain a bit opaque. And I feel like there are two things that would help. I think that we have a definitions section. It needs to be expanded a little bit. So for example, you have budgetary unit, you have character, you have fund, you don't have account, which is a term that comes up, almost immediately. But I think we also in each case need to give like an example of what, like, as you did for character categories, we need to give examples for the other things. And what would be most helpful in explaining the rule would be to give a couple of examples and non-examples of what's allowed and what's not. So for example, just like the ones that you did, where you said a division, for example, collections wants to spend money on X, and they want on more on training, and they want to take it from somewhere else in services and supplies like paper clips. That's allowed. Whereas a division wants to spend money on something and they're going to take it from another division in a different part of the budget, and you give a couple of specifics so we can all look and nod and make sense. Otherwise, it's not clear, and I think people are going to read it and go, I don't understand. That's my concern.
I agree with you in the sense that I love examples and definitions and information, and I thought that too in terms of the categories. It'd just be nice even if the numbers were right there beside. So in concept, I think this is a logical approach, and we should do it. And it makes a lot of sense. I'm surprised because I don't remember that many things coming back to us when things are shifted around, but regardless, I think it's a good policy. I think that Andy's remarks are well taken, and that I would go along with those suggestions for just personally. I was wondering when you were talking about it on page 28, you mentioned somewhere in your narrative about the fund level that remained with the commission. On page 28, it talks about the agency level. What's the agency level? Is that just
The library.
the overall? Okay, all right. So does it say anything in here about the fund level?
It does it's on the section 1A.
A. Hmm.
Page 29.
Oh, based on the fund. Okay, gotcha. All right, great. So, Andy, would you be requesting that this come back to us with the
Well,
changes that you're suggesting?
Make those clarifications. I mean, I think the principle of it makes sense. It makes absolute, there's no reason why you should have the ability to spend the money. The ability to make corresponding appropriation adjustments. I think that a couple of additional examples need to be clear as to what is or is not allowed, that's all.
Commissioner Doyle.
So you would like those examples specifically in the policy?
That was my question.
Well, you
In the
have
policy or the cover?
some already.
Yes, I tried to keep it simple.
So for
You know,
example,
not-
I'm looking at the bottom of page 29. Says transfers between budgetary divisions within character up to $75,000 require director approval. Examples include transfer from IT division, service and supplies, to the collection division, services and supplies. That's an example. That's an acceptable example. what would not be, what would not be an example?
Not allowed, not allowed.
You say between divisions, but within character. So to give a non-example to me would be, on the other hand, a transfer from IT technology division services and supplies to collection division salary and benefits would not be allowed because
If I could make a suggestion. So, we probably want to keep our policy pretty clean. When we did our safe use policy, we created a policy, but then we created a secondary document that was an appendix that basically said, these are the infractions and these are the kinds of suspensions that one would get. And that's what I would prefer, that we keep the policy nice and clean, but we can do a separate sheet that maybe shows what the funds are, what the characters are, so it's more easy to understand.
that would be great.
Right, so we have consensus on.
Yeah, we want
moving
this to come
forward.
back to us.
Do we
Or,
want this to come back to us?
Can you do it by the commission meeting?
Probably not November's.
I personally don't think it needs to come back to
No,
us.
do
I
I.
think we broadly all accept it. It's a good idea and we're sure you're bring up the narrative to the point the points that are being made, so. Yeah. Okay,
So just so that I understand, a one pager that would provide additional examples of what is allowed and what is not allowed for each one of these sections. Okay,
and I think again, there's the numbers for the character categories, what they count, whatever that number is
account,
called.
okay.
And
Can you elaborate a little bit on that? Because there's literally so many accounts. If you look at your monthly report for September, that whole schedule is the list of accounts that we use.
yeah, but there,
That same account is for all of the itemized. Maybe,
Staff pretty much knows what that is.
Yeah.
So-
but the commission doesn't. So, you want to do a little blowout from the financial reports. It's all the individual line items. Are considered accounts, and when you roll up the accounts together, those become a character, right? I mean, this is accounting talk that
Mhm, it is.
Do we have a similar definitions in the other policy that we have that talks about expenditures?
No.
oh, too bad. Good call.
Good idea.
David,
yeah. I think just a couple of examples from the chart of accounts and all the budget to actual and so on stuff in the fine print. The character 51,000 is services and supplies, just to say that. And two or three other examples. Yeah, it's a summary. Exactly. Right, but just so that people recognize, oh, this is part of our numbering system. That's what this means, and people then won't have any questions.
so how do we want to handle this? Do you want it to come back to us?
No,
No.
I think we don't want to change the policy. We just want to have something that will make it a little bit easier for the commission to understand.
So is that clear what we're suggesting for commission meeting? Okay.
Yes.
Are you all right with that?
Yeah, I'm fine with it. To me, it sounds like it's a like a little cheat sheet.
Cheat sheet, that's what we want. Yeah. Okay. Thank you. All righty.
Item, I think.
Yeah. Item 4.5 draft proposed allocation of annual surplus funds. Whoops, I didn't have my, sorry, I didn't have my microphone on. We're at 4.5 draft proposed allocation of annual surplus funds. And before we start, any member of the public join us at all, Lisa?
No.
No, okay, thank you. All right, Mirna again, please. Okay.
So there's been a lot of discussion at the commission level regarding fund balance. It is something that we use in particular to fund our capital modernization projects. The fund balance, there is a fund balance policy that was adopted back in 2021, and it outlines the uses of the fund balance. And the fund balance, the Finance Committee subsequently, over the last few months, has requested either a policy or more guidelines on supplementing the fund balance policy and clarify the allocation of any surplus funds to pay for library priorities. Since my tenure, it's going to be 3 years this November. The fund balance has primarily been used for those modernization projects. I did have the fund balance attached here for your reference. So I see this as maybe guidelines to supplement the fund balance. A policy per se is much more demanding of that we adhere to certain the exact what's laid out in the policy, and guidelines provide more flexibility. So having said that, just as a refresher of like, what are surplus funds? Surplus funds are created when revenues are greater than expenditures. And all of the obligations for the library have been paid for. And for the library, the statement of special fund activity reflects the fund balance. And it reflects a section of committed fund balance and unassigned fund balance, or non-committed fund balance. And the unassigned or uncommitted fund balance can be used for budgeting. And so when we've applied the fund balance policy, the policy itself gives subcategories of committed funds, and they include the stabilization fund, capital asset maintenance fund, and the capital improvement fund. And over the last 3 years, the library has been committing funds there in all those categories. And the concern has come up that since the surplus funds are characterized as one time, they're not ongoing, that the library should have a much more mindful process of the utilization of those surplus funds. So that's where this report comes in, and proposal to provide a framework to allocate those funds according to priorities. And so the priorities, the way I've laid out, are of course the stabilization fund, which is a requirement under the fund balance policy. And the others are the other three, which one is it? the capital asset, a maintenance fund and the capital improvement fund. Since this is the only funding source for capital projects, I've prioritized those. The second is maintenance and also one-time priorities, which this committee has discussed in the past in terms of paying down the unfunded accrued liabilities under pension and OPEB and other priorities as well. I'm just giving those as examples. And then to continue to have an unassigned fund balance that is unassigned, so that if there were a special one-time project or a special one-time need, that there would be, gives the commission some flexibility to utilize the fund balance for those nice investments or necessary investments. So that's the big picture. Also, I wanted specific feedback from this committee on the allocation of the percentages in this proposal, as well as a process for identifying these one-time priorities category. And also, this is forward-looking, but the finance committee could also like to look at, are these ratios also applied to the existing fund balance? So those are some questions that I'm presenting to you to give some feedback. The way this, I have laid out the policy here. And first, if there are any I think the best way to explain this is if you look at my example that shows, let's say there were $1 million surplus in, if you look at page 32, at the end of the year in sales tax. We are funding the stabilization fund at 20%. So there's an assumption here that we're increasing expenditures by $1 million. So you have to set aside another $200,000 from that surplus. So then you have really available $800,000 to fund the remaining categories, which would be the capital improvement fund. This is where we would use these funds for facilities as well as IT capital improvement projects that you saw in the Q1 report, for example. And then the second category is maintenance. These are major maintenance projects that are listed in the fund balance policy. And then the third is one-time priorities, like I said, pension. And then the unassigned fund balance. So I break out the 800,000, I apply these ratios to then fully use those $800,000 surplus. Yes.
What? Go ahead.
Yeah, I like this. I think maybe it would be helpful to emphasize the percentages of this example less. Make it clear in bold letters, this is only a non-binding example. Because I don't want us to necessarily think we have to spend 50% on capital improvement. Again, this is just a technical question, because basically what this thing says is this surplus would come to the finance committee first. We would make recommendations to the commission. And of course, seems a beautiful flow of decision since we're the finance committee. I just don't want to get hooked into these examples. The examples is a good one. I just don't think we ought to give people the impression that this will always be how the money is split. So I like it.
Well, but the percentages are gonna be a real number.
I don't want them to be that real. I don't think we know enough.
Well, that's kind of the point of the discussion, so,
They're not real, they're going to policy.
right.
No, I think the policy is fine without the percentages. Because we set forth the process for approving these. But pardon me for being a little opaque. Is this supposed to be done annually?
Yes.
Okay, fine. That's what I thought.
So right now, this is of course my very favorite report that we have. I love this report. Thank you, Andy and Mirna and everybody who worked on this. Because it does show us exactly where we are. And we still have this kind of a dual language thing going on here because we don't like to talk about surpluses. But it's actually the amount that comes down into the unrestricted fund balance available for budgeting. And so whatever that number is at the end of our audit year, right? We have the audited numbers, then it comes to us mostly, according to this draft policy, to figure out what we think should that chunk that we're responsible for. But otherwise, it's kind of an automatic application of this percentage to fill these categories that we already have on. So that is the discussion though about, and it doesn't have to be these numbers. This is, a draft, that Mira's bringing before us.
Not an emergency.
Well, the two things about it are whether this has been talked about, and I think it's a great idea. And again, it's a way for us as a commission to get to some of our issues. We've talked about having a CalPERS trust, and we just put that aside to see how the election goes and so forth. But it's a way to address that. This could be our priority for the next calendar year. The 30% of the surplus goes into a CalPERS trust, just as an example. What do we do about headquarters? How are we planning for headquarters? Are we putting aside money for a down payment for headquarters? I mean, this is a way to deal with some of the things that we have all collectively talked about. And then the related thing to me, the important thing to know is whether once we're making these decisions about possibly participating in funding the Roseland Library, the new library. Looking at what we have left, but what the remainder is after we come up with the additional funds for potentially for Petaluma, additional funds for Healdsburg. What do we have left? And do we then apply this kind of a formula to that amount? Or do we just let it hang in there in this kind of, big pot like it is right now? So there's two different aspects to this discussion, but and it's getting late in the day here to take this on, but these are really important issues that, we've addressed some of them and we need to address the other two, my humble opinion. So, and Andy?
Yeah, I appreciate you bringing this to us. I think it's super important and I'm glad we're beginning the discussion. I have just a question for my own clarification. On page 37 in the fund balance policy. Under policy, second paragraph, it says the fund balance shall be maintained at a minimum of 15% of the library's budgeted expenditures annually, with the goal of having 20% of the budgeted expenses in the fund balance. Seems to me that this past spring, the commission voted to increase the amount of money in the stabilization fund to 20%. Did that change the policy or was that simply about one budget year?
Yeah, we talked about this. We kept it at the minimum, but raised it to 20% because the 15% is just a minimum. So we
Right,
didn't
right.
change the policy. Well, we had a good discussion about this one.
Well,
And we did it. I'm just not clear on whether it was a policy change or whether it's something that we'll revisit every budget year.
that's the interesting question. The policy is a minimum.
Right.
So the policy hasn't changed. It's
Okay, so
still
policy hasn't
minimum.
changed. So it was just the current year.
a current year, I would like it to maintain, as long as the library can be sustainable,
Right,
to
I
maintain the
think
20%.
I would too, and I think Barbara would also. So that being said, and I don't mean to be sorry, I'm just being a pain today, and I'm looking at page 32. And I'm gonna tell you why I think may not. The 20% allocation to the stabilization fund might not make sense here. A surplus is we have a budget at the beginning of the year. I'm gonna use round numbers for ease of understanding. Let's say we have a budget of $50 million. And that includes salaries and benefits, it includes supplies, it includes capital expenses, everything. When we approve the budget is when we also look at what adjustments, if any, do we need to make to the stabilization fund? And if so, at a minimum, we would say, well, it's $50 million budget. That means the stabilization fund has to include at least 7.5 million. And ideally, it's going to include 20%. So the stabilization fund would include $10 million at the start of that year. Is that so far so good? Then over the course of the year, we spend money. We spend $49 million, but we don't spend 1 million. That 1 million now becomes the air quote surplus that we're looking to allocate. We've already accounted for the $50 million budget in the stabilization fund at the beginning of the year. So the fact that we're now going to allocate this money to future uses like capital improvement or capital maintenance doesn't increase our annual budget. And I don't know that we would need to allocate 20% to the stabilization fund until we get to the process of annual budgeting. Did I explain that in a way that makes any sense?
Are you concerned that it would go over 20%?
No, I mean, if it
Okay.
goes over 20%, that's fine. I'm
Right.
just saying we wouldn't have to do it to keep it at 20% because
Right.
we've already done it at the beginning of the year.
So if I may, the decision would be made after the audit is completed, and the audit is completed in December.
Yeah.
So let's look at this year, for example. You're in December, you'll be looking at, the commission will be looking at the audit for fiscal year 24 that ended in June. So, and so then the new budget process is actually starting in January. So if this were to be in place, then this is just an example. I don't know what that 20% will be, right? But I can safely say that there may be an increase from the current budget of this year, right? 52 million to maybe 51 million, right? So then from 52 to 53. So I'm increasing it by 1 million. So now I know that I need to apply at least the 20%. I know that I have a $1 million surplus. So I know that I need to allocate some of that surplus to next year's budget, which will be about 200,000.
Okay, so I'm gonna stop you for a second. If we assume that next year's budget will be higher, it could be prudent to allocate some of this to cover the additional amount that would be needed for the stabilization fund. But that amount will be 20% of the difference between the
Yes.
new budget and the old budget,
Yes.
not necessarily 20% of this amount.
Well, that's what I'm saying. What I don't have here is the assuming that where I could have is another line here under stabilization fund, assumes that there's an increase of $1 million in the next year's budget.
Yeah, and if it were $2 million.
or whatever it is.
If it
But
were
this is
$2
what-
million increase, then you'd be allocating
Yeah,
$400,000.
well, my examples would say stabilization fund, parentheses,
Okay, that would make it clearer because it. Yeah, that would make it clearer. And I guess the other thing that we all know we're not through November yet. We don't know what's gonna happen with Measure W. We all hope it's gonna pass. I think it's great to be talking about allocation of surplus funds to these purposes. I would like to see these as part of the annual budget process. I would like to see us every year. I mean, it seems to me, we have a capital maintenance fund, right? We know that our IT equipment is, depreciating, wearing out. We know, bless you, we know that our vehicles, like the Bibliobus, are, wearing out, needing repairs. We know that we're gonna have to be spending money on those things. We shouldn't be waiting to see, gee, do we have a surplus to put toward that? We should be funding that every year as part of our planning process. Similarly, capital improvements. We know that we've got a whole facilities master plan of libraries that need upgrades and major modernization projects. And we should be looking at saying, okay, whatever we think $2-3 million a year, we have to be putting toward that if we're going to be equitable in dealing with all the projects that are coming up. Then if we do have a surplus at the end of the year, sure, we should be looking at this kind of allocation, but this shouldn't be the only time we're doing it. We should be doing it as part of the budget, in my opinion.
it is.
It is part of the
yeah,
budget.
Part of the budget.
Yeah.
We do that currently,
Right.
but we just don't have a ratio. So for example, in the budget for vehicle maintenance, there is we normally allocate around, we look at what the cost of our fleet is and then look at the life of each vehicle to then determine how much do we need to set aside in order to have enough funds when the time comes to replace the vehicle. So that we do that as part of the budget.
So we're already every year allocating capital improvements and capital maintenance.
Well, for the maintenance, vehicle maintenance, yes, because there's a very clear, we know what our vehicle fleet is. But for the capital improvement program, the way we've been doing it is just by, if you look at the Q1 report, the list of those projects, that whatever the approved budget is, that's what we commit. So we are not committing any more funds. But this would then allow us to not only cover the approved projects, but then set aside additional capital improvement funds for future projects.
Understood. And I know you want to say something. I'm just going to say one thing. If we're looking at this on a long-term basis, I would feel it would be more prudent to be putting money into capital improvement, even if we didn't have a project starting that
Yeah,
year.
that's what this is for.
But not just surplus money at the end of the year. I'm saying as part of our budgeting process.
Oh, you mean our operating revenues?
Yes,
Okay.
yes. I'll bring it down to household, okay? You're doing your household budget. You live in a house that was built in 1983. You know that it's going to require a certain amount of maintenance every year, whether it's the siding or the roof or the windows or whatever. You don't wait until you have the expense and say, oh, we're going to do a project. You put money away with the understanding that some years you might have a lot of expenses and some years you might not have any. So I'm saying this is great, but it shouldn't be the only way that we're allocating money toward.
So,
capital
funding,
budget.
or funding the maintenance.
Yeah.
So what I'm hearing, I'm translating, is that for the maintenance piece, we should use some of, in addition to any surplus funds
from our operating revenues, we should be allocating funds into these, the pot. of
Every
money.
year, in my humble opinion.
So, I can see though, so this is my take on things. Great idea. But like we have this with our, in our MOU, every employee gets staff development funds. And so we have to set aside this money every year, even though by and large, it doesn't get used. That's fine. But I propose if we're gonna do that for maintenance, that we have some kind of, until we reach a specific amount. Because that could grow every year. And if we say we're only gonna use it for maintenance and it doesn't get used every year, then it's gonna balloon. And we need to be able to have some provision to reallocate those funds to other projects or to other areas.
Don't disagree with that at all, and I would love to have a situation where our, you know, the funds that we've set aside for capital projects are exceeding the ability of our team and our JPA partners to actually get those projects done. But I worry that
We're gonna run out of
we're
money.
gonna run out of money if we don't prudently allocate. And again, this is not to say this is great. I think this is wonderful. And when we do have a surplus, absolutely, we should be sure that we're taking care of the stabilization fund first. We should be allocating money to capital improvement, to maintenance, and to one-time expenses. Absolutely. But we shouldn't just be waiting on the surplus. That's all I'm saying.
David, and then I have a comment.
Yeah, two things. First of all, I had overlooked the fact that our stabilization amount is actually 15%. It's a minimum. By putting 20% in here, we're essentially through the back door stating that the real amount is going to be 20%. I think that's a mistake. And secondly, I agree with Andy, this whole thing should be wrapped up into the annual budget, because otherwise we'll have 2 rounds of budgeting. We'll do it in the spring, and then we'll have a supplemental budget knockdown, drag out over what we do with each surplus after the audit comes in. I'm just not comfortable with it, that's all.
So we do have a mid-year budget review, and that is when we make those adjustments, and that is what we've already been doing. So in my mind, it makes sense to roll that into our mid-year budget review.
I would recommend that it would be part of the annual budget, because like I said, the way this is written and I'm proposing is that after the audit, we know what the surplus is from the prior year, right? So right now, we're looking at the fiscal year 23-24 audit in these, and it says what the surplus is. And the commission will accept that audit in December. Our budgeting process for the next year starts in January. So then now I know, yes, cool, I know what the surplus is. So then when I build the budget and present on nice little, slides, that I could have a slide that says, this is what our surplus was last year. This is, and talk about the fund balance and lay it out how, if there's any, there are surpluses, and you can see here that this is the way it was used.
Question, pardon my ignorance here.
Hello.
Let's say that, and I'm not looking, well, actually, we can look at the current, easiest way to do it. Yeah, okay. So in the current budget, I see that we have included the use of fund balance in our planning, right? Because if you look at the very bottom line where it says surplus deficit, use of fund balance, that we're anticipating that we're going to use almost $3 million of our existing fund balance to realize this budget. Let's suppose at the end of the year, we haven't spent $48.4 million. We've only spent $47.4 million. That $1 million difference, is that a surplus? Even though we were using our own fund balance to.
It depends.
Okay,
Okay.
you understand what I'm asking?
Yes, it
Okay.
depends because the 2.8 million, this was structured in a way that the 2.8 million is for our capital project. But there is a surplus under capital projects. It just reverts back to the fund balance.
Okay, so that's not considered a surplus, but
Right,
yeah,
but if there is a underspending in services and supplies, then that is what is replenishing our surplus.
thank you. So that's very important. Thank you for clarifying.
Okay, here I go. I've lost control of the meeting, but.
Sorry.
I just want to go back to the fund balance for just a second. We had this fund balance policy where we had these other funds in here, but they weren't funded. And it's just been in the last few years, we revised the fund balance policy. It's just us and I think we're on the committee. And because Myrna was here, she funded these things. So it isn't, you know, it is an ongoing part of the budgeting process that she kind of automatically fills these slots in here, but we didn't used to do it. It was only a policy in words only, but we didn't really have the money in these different pots. So that's why this is such a, miraculous, clear and, fabulous document. The only thing, again, my concern is about the wording, because when we do use a word surplus and it doesn't appear anywhere else, we know what we're talking about, but it sounds, it still doesn't have that consistency of the language of unrestricted fund balance available for budgeting. And I think that is the wording in the audit report. I believe that's the wording they use, isn't it? I think so.
It might be, I have to check, but I
So-
mean, we could go back and see if we can change that wording to
Yeah.
unassigned.
So just so we just stick with the same language, so I don't have some other word out there, they think there's some other pot of money. But back to the point, this is gonna, we're not gonna be able to fine tune this today, but I believe that this is a great idea to have a plan. In my 10 years here on commission, I came across one time where there was a report, here's some suggestions. It was Susan Hildreth, actually, suggestions for the unassigned fund balance, and I added it all up, and then nothing ever came of it. We didn't act on it or anything like that. So it's really good to have a plan like this and to have room in here for, our weighing in as commissioners, as a finance committee on having this 30% chunk. I mean, I really liked the way that you formulated these percentages. And then secondly, I mean, a really serious discussion, I guess next month or whenever we can do this, about what we do with our current money that's left, that we currently have, which is, 19.2 million minus, what that bottom line is going to be. So they're kind of two separate discussions, same concept. How do we spend it? So I don't know about moving forward with this. It sounds like next month is going to be full with the audit. And anyone have any suggestions about continuing this discussion?
What about,
I think that we should continue it. Like at that point, where we've had the audit and right before the budget process happens. That would be a good time to revisit it. Can I ask Erica a quick question?
Okay.
I understood what you were saying, Erica, about, for example, the vehicle maintenance fund. You would want to fund it to a certain level, but beyond that, it doesn't make sense. My question is, do you have any, and I don't, that's why I'm asking, do you have any thoughts about how you would describe the optimum level? In other words, I'm going to make this up. Let's say that the depreciation period for vehicles is 5 years. You might say, okay, we never want to have a sum greater than the amount that we expect to spend over a 5-year period, and we would spend down 20% of it each year and replenish or whatever, or you don't have a specific framework in mind, or
I don't. That's something that we would probably have to look at.
Okay.
But the
it
other,
makes sense. I just
Yeah.
don't know what it would be.
yeah. So the other thing I would ask you all to consider is first determine whether or not these are the categories that you think we should go with, or if there are any other categories that we should add. So I think that should be the first thing that is decided, is that you are in agreement with these categories. And then once you make that decision, then, you know, the ratios, and are they gonna be fixed or are they gonna be variable? That will be another point of discussion.
Yeah, I think that agreeing what Ann was saying is that January would be a perfect time. Because by that time, we'll have the audit results, we'll have real figures for the fiscal year ending last June 30th. This June 30th.
January.
Happy New Year.
Is that soon enough?
January is fine. These would just be, how to allocate. And I don't think that January would, yeah, it's.
So let me ask a question. I think Andy was getting at this thing about, equity among the partners. And I think this sounds like a different fund. That isn't the capital improvement plan, it's a capital something plan, like,
I think it's a different fund.
well, capital improvements means there is a building and we're gonna improve it. And what we're thinking about doing is there's a building that isn't built and we're gonna help fund it. And so if this happens to be the case in another jurisdiction, where would that money come from? So that would be a different account, right? So it's a,
It doesn't have to be a.
Yeah, it
different
doesn't, I
account.
don't know that I would see it that way.
It's all
well, so
construction.
you're modernizing an old building, right?
Yeah, but if we call it capital improvement and construction, it could be a catch-all for existing, new, whatever.
Yeah.
I mean, I don't. When we look at how long it's taken us to even get started on the projects that we're now started, we're looking at a facilities master plan. Some of these things are gonna be years down the road. Who knows
Right.
what our partners are gonna wanna do at that point? I think I
Okay.
wouldn't wanna close the door on something we can't even imagine. I think the real thing is that we have to be thinking and planning long-term and allocating a certain amount of money every year, because we know everybody's gonna wanna do something eventually.
Okay. What's the name of the fund that we're using for the modernization projects?
The capital improvement fund.
Okay, so that is improving, well, okay. I won't argue the point. I just thought you were trying to go there, Andy, and I thought you're making a different suggestion.
No, I see it as a kind of potential for.
Capital.
I mean, I hope that there will be lots of modernization and building going on for many years after we're all no longer
Yeah, I think we all
on
do.
this earth.
All righty, with that, let us wrap it up. Any final questions of our staff?
Really appreciate.
Yeah,
you taking
actually.
this back.
Out of order.
All right, Commissioner Doyle.
I did have some questions, and was gonna respond to Commissioner Cahill. 15% is something that we decided a long time ago was the minimum, and during the good years, then 20% was something that we were shooting for. So I don't think that we should just assume that it's gonna be 20% because lots of things happen in terms of economy and that sort of thing. So there's that. And then the second thing, I assume would be in capital improvement, but Commissioner McKenzie mentioned, say, if Erica wanted to buy a building for headquarters, would that be in the capital improvement fund? Where would that be?
Can you repeat your question?
If, for example, we found a perfect building that was better than this for headquarters, would that, where would
So
that go?
The fund balance itself in
Mhm.
section 30, page 39 of this packet, 4.1.3, it says the capital improvement fund is to pay for priority projects to expand or improve the library services through the creation of new buildings/facilities. the addition of major new technology or renovation of existing capital
Okay.
assets.
Feels like it's all inclusive.
Yeah, okay, that's great,
And
that's
then-
great. And then it would continue to roll over every year, so we put it aside and keep, okay, fabulous. That's all.
So items for the next meeting, I think we kind of went over the work plan. Anybody else have any issues for agenda items for the next meeting? And if not, I thank everyone for their participation, even the sleepy people who've been gone for a long time. Welcome back and thanks for your participation, and we will see you next month on date with this on a piece of paper that aren't so.
You want to tell us?
Can't be.